Many expats living in the UAE don't realise that they have an advantage as an expat living offshore from their home country for tax purposes. UAE Money Talk will explore the advantages and look at the benefits. Sean, tell us, what is offshore?
Okay, well that depends on how hard we look. So we look at the layman on the one hand and the technical answer on the other. For many laymen picking up a dictionary, it will imply that offshore means that you get tax advantages. But even then, a deeper look at that would show two jurisdictions. Number one, where you are resident, and number two, where you've put your money if it's in another country. Mm-hmm. The technical definition has three jurisdictions for offshore. Number one is your residence, i.e. where do you live. So me, for example, I live in Dubai, so my residence is the Dubai UAE, but my domicility is British because I have a British passport, so that gives me two jurisdictions. If I then put my money in Isle of Man or somewhere like that, which isn't in the UK for tax purposes, then that creates a third jurisdiction. Mm-hmm. So in this instance, the technical term should be, and when people ask themselves a question, am I offshore, am I onshore, they should examine those three areas. Number one, their residence. Number two, their domicility. Number three, where their assets live.
And who does it apply to?
I actually think it's easier if I answer the question, who doesn't it apply to, then it applies to everybody else. Okay. So if we take in the UAE an Emirati with his assets in an Emirati bank, then he is a resident of the UAE, he's domiciled in the UAE because he's got a UAE passport, and his money's in the UAE. In this instance, he doesn't have any other jurisdictions to consider. However, if he decides to buy a property in, say, London, now suddenly he does have another jurisdiction, and that property becomes an offshore asset which has a concern of some sort for him. Likewise, if we take a British guy with a British passport living and working in the UK, with his money in the UK, he doesn't have any other offshore concerns, so he is definitely not bothered with the offshore rules.
So that would really mean all expats, where, well, they're expat and then their money is offshore as well?
Yeah, absolutely. If they've moved away from their domicility and they've got a job and they're earning and they're putting their assets in another country away from their domicility, then they will have some offshore issues.
And what's the benefit of all of this?
Well, that really depends on probably two sets of things. Number one is the double taxation agreements between your country of residence and your country of domicility, and of course they are a myriad of different types of DTAs, double taxation agreements, plus the actual countries relating to, so an Australian guy with an Australian passport working in the UAE and putting his money in the Isle of Man will have different considerations than, say, an Indian national working in the UAE and putting his money in Jersey. Totally different jurisdictions. So each person needs to examine the jurisdictions that are relevant to them on a case-by-case basis.
So is it a myth really then when we talk about offshore being tax-free?
Yes, it's not accurate. It's not totally accurate because it depends. Well, yes, it is a myth. For example, Americans, Uncle Sam taxes you on your worldwide income, so there's no such thing as tax-free income for them. They have to, they have their liability limits. They have to put in their claims and their reports every year. So their annual reporting is onerous, and you know, each country has different levels of onerous responsibility and different sets of rules, so you just can't give a blanket answer to.
So it's really important then for the individual to learn about their own home tax rules?
Their domicility rules, yes, their residence rules, yes, and the rules applied to where the country where they put their assets.
What are the benefits then of expats living here in the UAE?
Well, the obvious one, of course, is not paying tax on your income. That's a really good one. I mean,
yeah, that's why we're here, right?
Yeah, big earners like yourself, you're laughing all the way to the bank, aren't you? Because you're really only paying for indirect taxation, and they haven't yet cottoned on to direct taxation. That's number one. And the second one is depending on what country you come from, your savings aren't directly taxed. So in many countries, taxation is taken away from your saving, and you know, it's going back to Einstein's quote, the greatest mathematical formula of all time, or word to that effect, is compounded growth. So if your earnings on your bank account is say 2.2%, but after tax it's 2%, then if you were getting compounded growth on 2.2, then over time you're going to earn quite a lot more than the compounded growth on 2. So it's just leveraging a higher number.
And is that because they're expats, that's why they're not paying tax on savings?
It's because their savings are in jurisdictions that are outside the control of tax authorities. So it comes back to our earlier question, that separating the jurisdiction of where you're from, your residence, and where your assets are.
So over 10, 20, 25 years even, it will make a massive impact.
Yeah, no, I got on the calculator in preparation for this question, and a 0.01% difference on £100 makes £10 over 10 years. So the great thing about compounded growth, of course, is that you make money on your money, and the next year you make money on your money on your money, and then you make money on your money on your money on your money. So you move up in an exponential curve.
As expats, we're not paying 20, 30, 40, 60% tax on our salaries like our counterparts in our home countries. By understanding offshore advantage, you will make the most of being an expat today.